New World Oil and Gas is an AIM-listed investment company focused on investing in and operating oil and gas projects. Bill Kelleher is the chairman and chief executive. Bill, welcome.
Thank you.
You listed on the 11th of May in London, as I said, on the AIM market, raising some £3 million, 5 pence per share. Then there was this 40% rise in your share price. There's been a little bit of a retrenchment, but tell us a little bit about what's been going on.
Well, actually, the rise was more like close to 100%. What happened was, after we listed, we had a pipeline of projects in the works. We were more or less spring-loaded on our first project. We had ticked a lot of boxes on it before we showed up. When we listed, we engaged into a transaction process immediately. We then entered into a contract with a competent person to generate a competent person's report. And fortunately for us, as per our earlier determinations, the CPR turned out to be much more prospective than what we thought. We tend to look at things a little more conservative. It helps us with our negotiation process. And the results of the CPR were very strong. And obviously, upon conclusion of the CPR, we announced that, and that was the market's response. They looked at it and they said, oh, so what they thought was good is actually really good. And it caused a lot of buying pressure. We had trades over 10 and leveled off in the high 7s, 8p range, which is up about 60, 70%.
Now you're talking here about primarily one asset, really, isn't it? It's in Belize, isn't it?
That's right.
And you call yourself an early stage exploration company, correct?
Right.
What's your strategy here?
Well, we looked at all types of strategies to enter into the business and go from a cash shell to an operating oil and gas company. We looked at buying proven developed producing reserves. You know, a very quick way to establish a strong foundation to your share price, where you won't get any likely dips other than big, huge downturns in the market. The problem with buying proven reserves, which are producing, you're paying full price. And in many cases, you're asked to value these assets on oil price decks, which are escalated over time. Very little upside we can offer to our shareholders doing that. So what we chose to do is look at late stage exploration, low risk exploration, where you'll get your 20, 30, 40 to 1. If you have the right team and you understand the application of the right technology to enter into early success. That's really our strategy. That running in parallel with a solid funding strategy. What we did with our vendors in Belize is we said, right, listen, what we want to do is agree to a work program that makes sense. We don't want to spend more money than the asset needs to lower the risk as far as we can get it. But when we lower the risk as far as we can get it, we made a commitment to drill. So what we agreed with our vendor there was to proceed through a 2-phase seismic program, which enabled us to, in the first phase, look at a more regional setting, and then to adjust that and look at the more prospective areas with a tighter, higher density grid as a phase 2. On the completion of phase 1 and phase 2, we update our CPR each time. Now, what we've done with our existing cash reserves, or rather what we'll do with our existing cash reserves, is we'll get through phase 1, phase 2 seismic. We'll lower the risk as far as we can get it until the next logical step is to have a look with the drill bit, to drill. So what we're doing as a strategy is we're saying to the market, we're investing our existing cash reserves and reducing the risk as far as we can get it until the next logical step is to drill. And then we'll go back to market and seek funds for drilling.
I was going to say, so at that point you're going to need more money. When is that going to happen?
Well, phase 1 and phase 2 will be complete. Well, phase 2 will be complete by January, February of next year. We'll go through an adjustment interpretation phase. We'll understand everything. And we'll likely be back within a year's time to look for about 10 million, 12 million pounds of drilling capital.
So how should an investor or potential investor look at this company? How should it value an investment in this business? Currently shares, what, 7.5 pence?
Right.
But how would an investor go about valuing their investment in this business?
Well, I would advise the investor to wait until the updates of the CPR come out as a function of the completion of the phase 1 and phase 2 seismic. Because upon completion of the update of the CPR, you'll be able to, what the CPR will glean is what's called a deterministic volumetric spread of prospective resources in the P10, P50, P90 categories with an expected case. That expected case volume will assume a discovery and put scoping economics to it on a price deck which a local buyer will tell us they'll pay us for our crude oil. And the basis of that will then determine the expected market or estimated market value, the EMV. Now, when you look at the EMV and you look at the share price today, you'll be able to determine the delta between the share price we have today and what it will be in the future, keeping in mind that that EMV is heavily risked, and it's likely to be equal to or greater than that number.
And remind us, when is that CPR report due out, that competent person's report?
January, February of next year.
Right, okay. And what is your expectation? And what is it going to say? What do you think, what do you hope it's going to say?
Well, I can tell you from experience that a block like this, with this kind of data that exists out here today, and our plan in connection with obtaining more data will only further enhance the subsurface. It'll only improve it. Now, certainly I can't guarantee it. A lot of things we learn from our interpretations in the subsurface when looking in 2D are things what not to do. But in this case, the area is so prospective. It's in a great neighborhood that we expect the results only to improve.
Talk about great neighbourhood. I mean, we know that Belize is a democratically elected government. It's obviously a fairly safe place to be. The market is not safe at the moment, though. There are all sorts of question marks about it. Do you feel vulnerable in a new startup company? Do you think there are vulnerabilities in your business?
Oh, absolutely. I mean, you know, there's no guarantee. You know, gravity can always take effect. We saw that in 2008. You know, we've tried to apply the lessons we learned from 2008 into the structure and the strategy we put in place for New World. And that is, you know, apart from having a tremendous asset or group of assets, what's equally important, and it's a challenge which matches the challenge of finding oil and gas reserves to begin with, is to have a sound funding strategy to keep yourself going. In our case, we're raising money. We have raised money, rather, to complete our technical work up front, which arrives at a point, takes us to a point where ultimately we go back to market for a second step for drilling. There's no intermediate steps. I mean, if you're an investor and I come to you and I say, I'd like you to invest in my company because I'm going to shoot seismic and maybe I'll drill, that's one thing. But if you're an investor and I come to you and I say, you know, I have all the money I need to shoot seismic, and I'm going to come to you when I'm certain what's there, and I've completed my seismic acquisition, and I know what I'm going to do, where I'm going to drill, and I would like you to invest because in 6 to 8 months I'm going to give you the answer as to whether or not you have a 20-to-1 or a 40-to-1 uplift. So that's the difference.
Where will you be this time next year? Obviously you'll have the drilling underway.
That's right. By this time next year we expect to have a second asset, probably converging on a third. We've developed
within Belize or
in other areas in the world. We've developed a tremendous pipeline of projects where we've, you know, spring-loaded a few of them, where over time, as they become mature, you know, a project, you know, has a shelf life, and you've got to act on it. And what we'll do is we'll act on it, but we won't act on it in conflict with our funding strategy and our shareholders' expectations. People ask me, when will I be back for more money? I tell them, well, if my share price is at 100p next month, you might see me next month.
Okay, Bill, it's great talking to you. Thanks indeed for joining us. Bill Kelleher, William Kelleher is Chairman and Chief Executive of New World Oil and Gas.
This film is for educational and leisure purposes only. Proactive Investors does not provide investment advice. The company is a publisher and is not registered with or authorized by the Financial Services Authority. Please refer to the full terms and conditions on the Proactive Investors website.